All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades in Wall Street from Main Street. Starting off the SP 500, you can see we had a red week and a bit of a bloodbath going into Friday. Market selling off to close out the options expiration date for the month of February. And the big headline was invasion fears, more Ukraine, Russia tensions, and so on and so forth. Personally, I didn't really see a lot of fear on the tape today. It looked a lot more like a controlled algo sell-off. There was a bit of a bounce in the afternoon, and there wasn't any sort of capitulation volume. Volume was actually pretty light for how hyped up this sell-off was, and there was the fear was more so in the media and the news cycle rather than on the actual tape, in my opinion. And I could be wrong. I could always be wrong here, but in my opinion, if the market was really concerned about an invasion, we would have been down a lot more than 65 basis points today. So to me, it felt like a lot of there's a lot of hype and a lot of kind of just market makers using the headline as an excuse to push the market where they wanted to. Again, that's just my opinion. Could we gap down and have a total crash Monday, or excuse me, Tuesday? We have President's Day Monday, so the market will have a 3-day weekend. Yeah, it's possible. It's certainly possible, but to me, I don't think that is going to happen right here. This low that was put in on the 24th is a major low. Look at the volume there. Market makers, institutions, they parked their money here at 420, and it's not going to just get taken out on the first try. Now, that said, you guys know my feelings about really, I've been saying the first half of the year is going to be turbulent. Tech is going to, be an underperformer, and I still expect that to happen. However, in the near term, I just feel like this market's probably a little long in the tooth on the downside. There's a lot of retail put buying going on right now. A lot of people chasing at the lows. And really, you're starting to see a little bit of fear creep in, but it's not fear on the tape that I'm seeing. It's fear more so in kind of the rhetoric and on Twitter and on the news and so on. So when I see that type of thing, I always, it's always a bit of a red flag for me. That said, I still think we probably have to go down and test the 430 handle here on the SPY. I've got good support right there. So maybe on Tuesday we get down there and gap down, and we'll see if we can get a reaction off of that. If we look at the triple Qs here, that would probably equate to the, somewhere around the double bottom area. In that range there, the 337, maybe all the way down to 335. On the Dow Jones Diamond here, I would say that it's around 338, maybe 337 there, somewhere in that range. And then on the Russell 2000, maybe about 195, 196, you see that pivot there. So those are the levels I'm thinking we're probably going to test early next week. But again, if this market does get a bid and we have something happen over the weekend that kind of, quells the fears a little bit, this market can squeeze really hard. There's a lot of puts. The VIX is pretty elevated. There's a lot of fuel for a squeeze if it were to happen. So bears really need to push this market lower and essentially need to somehow get it through this pivot if this market is going to continue to sell off. Otherwise, there is fuel for a pretty good squeeze here, at least over the next week or so. Now, some other things that happened this week. The bloodbath in growth continued. Roku reported today they got absolutely hammered here. We had FSLY reporting yesterday. They got crushed. And there's just been a beatdown all across the board. Roblox reported they got smoked. Affirm reported last week, and that continued. Some of these stocks, I'm going to have to say this, a lot of them should have never have been as high as they were. Look at PayPal here. It should never have been up at $300. And I'll go out on a limb and say this, but some of these stocks are trading below their pre-pandemic highs. I mean, PayPal is basically a $100 equity. Facebook is sub 200, close to sub 200 at this point, below pre-pandemic highs now. You've got, stocks like Fubo. These stocks are now getting attractive to companies like Apple, Amazon, these conglomerates, these, duopoly, oligarchy, big tech stuff. They're only getting bigger, and this is just an opportunity for them to even gobble up even more companies at a ridiculous discount. Look at what, Zoom, trading very close to pre-pandemic highs. Salesforce. I mean, this is a company. These guys make money. This isn't some mid-cap growth stock that has no revenue and hemorrhaging cash. I mean, this is a legit company. Salesforce, look at the discount in Oracle. I mean, so there's a lot of, I got to look at things logically, and that's the mindset I have here. And that's the mindset I always have. Yes, these companies, should never have been trading as high as they were. I was one banging my fist on the table last year saying that, it's ridiculous. You got Teladoc up here at 300. It should have never been up there. But at this point, from a contrarian standpoint, some of these companies are actually getting cheap, and a lot of them are becoming buyout targets. So, something I want to point out, I'm not saying go throw all your money into these companies, but it is intriguing. I do think it's worth at least taking a look at. That said, let's move on here. We'll talk about a few sectors here, as we always do. All right, so let's cover semis. So semis got hit a little bit this week, just like everything else did. You do have this kind of inside bar pattern here. So a big red bar from last week, opened flattish Monday, and then kind of rolled up and then rolled over, closed inside of that. So we do have an inside bar bear flag here, or inside bar bear pattern rather, on the semiconductors. NVIDIA reported earnings earlier this week. Stock initially held up and then sold off on Thursday and Friday, kind of closing below the lows. And, it did hold its 200 moving average, so it's hanging in there for now, but a little bit of weakness in semiconductors, more continued weakness in cloud software. We just talked about Oracle and Salesforce. Take a look at Adobe, just getting punished here. This might want to go down to about 420 here. So just IGV has just been, we talked about this really over the last couple of months. IGV has been the laggard in tech, and it's led the market lower here. This is probably going to have to come down and test double bottom here. So a pretty big beat down in cloud software. Dow Transport's hanging in there. We basically held the 15,000 area, so got down to 14,970. Essentially held the made support level, which was this low here at 14,900. And Dow Transport's held up. It wasn't a major bloodbath. Again, back to my earlier point, if the market was really worried about an invasion, and somebody always knows something, right? The big boys, powers that be know things. The transports would not be down 0.2%. I'm sorry, I just can't believe that. Again, could I be wrong? Could we gap down, 1,000 points on the Dow Monday? Yeah, or Tuesday? Yeah, sure, it's possible. But this to me just doesn't look, I have to be skeptical here. So just throwing that out there. But anyway, Dow Transport's hanging in. Home builders, again, hanging on by a thread here. So this is a weak sector with rates moving up. Obviously, it's putting pressure on home builders, putting pressure on real estate stocks. VNQ is holding the lows here. This will probably go down and test that lower wick pivot there on Monday if we do have a gap down and test to 430 there. But it is hanging in there for the meantime. It's holding on to this support area, so we'll give it the benefit of the doubt. Speaking of rates, we obviously had a nice blast off here in rates, and we were talking about this for months. Rates are going to go up, and they have to go up. It's just what's going to happen. They're not going to stay basically at pandemic levels forever. And rates making another move up. Now, they did get overbought. I said they'd go up to 2 to maybe 2.1, and now we're starting to see them pull back in a little bit. Still above all four major moving averages, still above the 20 moving average here on the 10-year, 30-year. Same kind of deal. Got up to 2.4. I said it would get up to 2.3 to 2.4. Got just shy of that, and now pulling back in. And maybe it wants to pull back to that 2.19 area on the 10-year. I could see you getting down to that 1.7 area. If you look on the weekly, it's a little bit easier to see. So maybe 1.7. A deeper pullback was 1.65 or so. But there is a lot of support in here, and you did confirm above that 200-week moving average. So rates are still strong. Doesn't mean that they can't pull back. Doesn't mean that they aren't a little long in the tooth. So let's look at financials. So XLF had a nice week the previous week, and then kind of pulling back in a little bit this past week here. Did reclaim trend, almost got up to all-time high there, and then now kind of back below all three moving averages here. It is still above the 200, but it did retrace a little bit. If we look at JP Morgan, was green on Friday, but still holding this kind of support area, got back above this trend line. It's kind of hanging in there. Financials are still a strong area. Goldman did retrace a little bit, but again, it's holding up better than a lot of things. One of the bigger losers this week, though, was Morgan Stanley. So this one hit all-time highs and then really just faded all of that move back. Got back to this little double bottom pivot, so it's hanging on to that for now, but now back below all four major moving averages, so we'll continue to watch that one. XLE here, so energy, maintaining the strong trend, so it did finally come in and test this 20 moving average, got a bid off of it, rolled over, hit it again. Maybe he wants to pull back a little bit in the near term. We'll see what happens. It's got a little bit of support here, a little local support around 65, 66, right in that handle there. But ultimately, energy's still in a nice uptrend. You see a nice spacing between those moving averages, and really nothing wrong with it. at the mean at this time. XOP also kind of just consolidating here. A little bit of a sideways choppy week, nothing wrong with that. OIH, nice little pop earlier in the week, and then retracing a little bit. Again, same kind of deal, nothing really wrong. Maybe a little overbought near term, but nothing wrong with it outside of that. And really, again, same thing on crude, although we did dip a little bit. So I talked about this in the videos yesterday and today on my channel. We actually touched the 20 moving average for the first time since December 21st. So, I mean, if you look at this, I mean, just look at the move, not even a touch, not even a kiss of the 20 moving average until this week. So finally a little bit of, of a pullback, I guess, if you want to call it that, but still closed above that 20-day moving average and its holding trend. Weekly, I don't see anything wrong. You did have a nice reversal here, but the volume was weak. It's not like this was a high volume reversal or anything. If that happened, then I would say, there's probably a little bit more of concern there. But again, nothing really wrong with crude right now. And I would not be surprised to see it get up to 100. So nat gas, again, the ridiculousness continues. So a huge pop here, again, getting up to that 100 moving average and pulling back right off of that. Not a sharp pullback, but I mean, just look at this roller coaster move up, down, and then, popping back in here. Now we'll see if it can put in a pattern, if it can start to go sideways. Then maybe you can make another move at, that 5.4 area, 5.5, somewhere in that range. But as of right now, without pattern, it's really hard to say what it's going to do. It's just been all over the map. So dollar index had a modestly green week here. Came off the lows, reclaimed the daily moving averages. It's still above all four major moving averages on the weekly, but you do have a pretty nasty reversal bar from a couple weeks ago. However, the monthly time frame is still well intact, and I do like this pattern here for an advance, especially if you close anywhere in this range here by the end of the month. That would be a nice 1, 2, 3 little consolidation there on the dollar index. So now, yes, we have to talk about gold, obviously. So gold actually pushing up here in the after hours. This is about 6:30 p.m. and it did actually close red by the 4 p.m. close. But it's actually green now. But in any case, you're up into this area here. This is going to be major resistance. You did get above this red bar on the weekly, so that's a close above that, so that's a positive. The only issue I have with it right now is this monthly. So I know the pattern's nice, but you're inside of this big red bar. So until we can close above that red bar high at 1919.20, we're gonna just kind of take everything with a grain of salt. But it is holding up really well right now, and it's it's a fear trade right now. So when there's uncertainty going on, there's a lot of uncertainty going on in the world right now. People are going to put their money into something that they know is a store of value, and that is and always has been gold. Now I will say, in regards to bond yields rising, I've pointed out on this channel, Jason has pointed out, there has been instances in the past, and even in the past 6 months, I know I've made note of on my channel and on this channel that gold can rise with interest rates, and it has previously, again, even in the last 6 months here. In fact, 3 of the most historic lows gold has ever made coincided with the Fed starting rate hikes. So 76, you go back to 1999 and 2016. So it's not unheard of. So this could be a legit breakout, especially if that's correct, where gold is going to rise with interest rates. So definitely something to take note of. I've been saying that something we need to keep an eye on. That said, we'll just continue to watch next week, and obviously continue to watch this 1900 handle. If we can get above that, maybe it needs to pull back first, but we'll see if it puts in a higher low, and then we'll go from there. But we'll continue to watch this area. We've talked about this in the past. Every time we get up into that OPEX and they run it up, they always blast it back down the next week. So we'll be watching very closely next week to see what happens. And it is a little overbought short term, but it is a fear play, and that can happen. So we'll give it the benefit of the doubt for now. Had a nice move, and it finished the week strong. Also, another positive is GDX also had a nice move as well. When you see the metal, or you see the miners confirming the move in the metal, that is always a positive. GDXJ also a nice move, although it pulled back a little bit more here on Friday. Let's look at silver. So silver also same kind of deal. It did make a higher high, but did not close above the red bar high. So a little bit of a weaker move here on silver than gold, but it is less of a monetary metal. It's got that industrial component to it. So it's a little bit less of a fear trade. So not too unexpected to see that. And then platinum started to move. So I've been talking about this nice consolidation pattern here. We started to blast off 1, 2 pop, and then a little bit of a pullback. I told you guys that 1100 area was going to be your target. You know, and I thought maybe you could get a little bit above that, and I still think it can, but it pulled back a little bit pretty sharply off that area. And maybe it needs to put in a little bit of consolidation to make it move higher, but ultimately nice little pop there for platinum. And palladium, I do like this pattern a lot. So it stalled out a little bit on Friday, but I like this weekly pattern. You know, nice pop, 1, 2, 3 pullback. The longer you consolidate, the higher it can go. Nothing wrong with that pattern there. And then copper finally had a bit of a flattish week again. So this was rejected. You had that attempted breakout last week. We talked about that. Came back in sharply, and now you have kind of an inside bar pattern here. So you got the big red bar, and you're inside of that. So it could be a potential bearish chop situation. And we'll watch it next week. Maybe it wants to go back down and test that 425 area on spot copper. All right, and let's flip over to Bitcoin. So Bitcoin actually, in the beginning of the week, was actually holding up okay, and it was actually showing a little bit of some strength here earlier in the week, which, you know, made me think maybe the market's got a little bit of upside in it. You know, when you see risk-on assets perform well, it's usually a bullish indicator, but it started to roll over just like everything else did this week. Had an uglier day on Thursday, and then a bit of a doji candle here on Friday. Did hold up okay, though. You know, a lot of things got sold off pretty sharply on Friday. A lot of risk-on assets got sold off. And, you know, Bitcoin held up. You know, it was only down 1%. Ether down 4%, which, you know, for Ether, that's not really that big of a move. Same thing with Bitcoin. 1% is absolutely nothing. That said, we're probably looking at about 38.5 to 39,000. That's going to be probably, we're going to have to come down and test that. And again, that might coincide with that area that I gave you on the spiders, that 430 handle. On the upside, if you bounce up to there, then obviously you guys know that upside target is still this upsloping trend line in 48,000. I do not think it can get through that at this current time, but we'll see what happens next week. Anyways, so yeah, lastly with the spiders here, again, I'm still, you know, overall, you guys know my position on this market. You know, I've been saying long rates, short tech. I've been saying, like, you know, this is going to be a risk-off year. It's not going to be, at least for the first half, this is not going to be just buy and everything goes up like it has been for the last 20 or so months. You know, this is going to be a tougher market to trade, especially the first half of the year. With that said, though, there's a lot of things that are just getting really overdone, and I'm seeing, you know, the put-call ratio is above 1.1. So I mean, there's a lot of puts, there's a lot of hedges on, and to me personally, it just feels like the boat is really loaded to one side. Anyways, guys, thanks for watching. Subscribe to Jason's Patreon. Come find me on carnivoretrades.com if you're interested in swing trading. We're absolutely crushing it this year. So if you want to get in on that, come check me out. Outside of that, leave the video a like, comment, subscribe, etc. And I will talk to you all next week.